Let's have a look at some business news now on the programme. Yuka Roya is joining us here on set. Yuka, starting with the latest economic data coming out of China. And Yuka, it's another indication, really, of a slowing economy there in China, isn't it?
Well, Stuart, Chinese exports in December unexpectedly fell the most in 2 years. Imports contracted even more. It's the latest sign that the world's #2 economy is losing momentum, with demand by Chinese consumers also softening. Adding to the concern, Beijing's trade surplus with the United States, which is at the heart of their trade dispute, has actually widened. Nick Rushworth reports.
Softening demand in China is already being felt around the world, with slowing sales of such products as iPhones and cars, prompting profit warnings from the likes of Apple and Jaguar Land Rover. Dismal December trade data for China include a 4.4% fall in exports and a 7.6% drop in imports. Beijing says trade was strong overall last year, only to tail off. Prospects into this new year offer a continued slowdown.
The biggest hidden worry in 2019 for China's foreign trade is still the grim and complex external environment. There are numerous uncertain and unstable factors at play. Protectionism and unilateralism from certain countries are rearing their heads.
That refers to the US President Donald Trump.
Tariffs have absolutely hurt China very badly.
It's feared his trade war with China could bite into Chinese growth further this year. One concern is that its surplus with the US actually rose for 2018 overall by a little over 17%. It now stands at a record $323 billion. That's due to Chinese companies ramping up shipments before measures went into effect. The continued massive China-US trade gap might prompt the US president to punish Beijing further rather than strike a deal on trade ties. That despite 3 days of bilateral trade talks in Beijing last week, seen as positive.
Well, those new figures from China certainly didn't provide an uplift to global markets. An upcoming Brexit vote also weighing on investor sentiment. European markets opened red across the board, as you can see, with London's FTSE down 0.4%. Paris's CAC 40 down even further at almost 0.7%. Earlier, Chinese shares took a beating both in Hong Kong and the mainland. As you can see there, Hong Kong down more than 1.5 percentage points. Tokyo's Nikkei closed for a public holiday. The Detroit Motor Show opens its doors this Monday. Some major announcements are in store, including an expected strategic alliance between Ford and Volkswagen. The carmaker is offering a first look at an upcoming luxury crossover SUV after announcing Cadillac would become its lead electric vehicle brand. But overall, there are fewer carmakers displaying new models at the North American International Auto Show, with the industry worried over new metal tariffs and the US-China trade battle.
For a very interesting year with potential ups and downs to sales, because if there is a real tariff with a deadline, then there's going to be a massive rush of people to buy ahead of that deadline being applied. But then, of course, there'll be negotiations with countries to hopefully avoid that tariff actually being applied to any vehicles.
Some more of the day's top business stories for you now. And Capsule Land, a real estate company based in Singapore, has agreed to buy 2 property firms in a deal totaling $8.11 billion. The deal will see Capsule Land acquire 2 units from a subsidiary of state investment firm Temasek and create the biggest property group in Asia with assets in over 30 countries. The agreement has yet to be approved by Capsule Land's shareholders. Travel disruptions are in store at Frankfurt Airport on Tuesday as security staff are set to go on strike. Hundreds of flights have already been cancelled at Germany's largest airport. The walkout will start at 2 a.m. and end at 8 p.m. It comes after similar strikes at airports in Berlin and 3 other cities led to more than 800 flights being cancelled, affecting over 100,000 passengers. Staying in the airline industry, Emirates has announced plans to reduce its number of flights by 25% during the 45-day closure of the southern runway at Dubai International Airport. The runway will be closed for maintenance from mid-April until the end of May. The other runway at the airport was closed for 80 days in 2014, costing the airline about $470 million in lost revenue. And finally, from the business desk, Game of Thrones will be back for its 8th and final season in April. The epic fantasy series, based on George Martin's Song of Ice and Fire books, has been aired on HBO since 2011, with the previous season ending in August 2017. This time, it will only consist of 6 episodes, but each will be longer. So another reason for you to stay tuned.
I've never watched it. You?
Not really.
No, there you go.